Good morning, traders. It is Friday, August 23rd. Where has the time gone? We've seen some decent downside momentum that's propelling from yesterday. And lo and behold, markets have rallied on the overnight. Not super aggressively, but a decent bit, as the day of reckoning has finally come. Jerome Powell and the Jackson Hole. Jerome Powell is going to be the main speaker here today, and everyone's going to have eyes on him. We have a few Fed speakers, I believe, throughout the day as well, and we'll take a look at what happened last year on the Jackson Hole. We got a pretty significant downside day, right? This is the SPY on that day. It was down 1.4% about. If we take a look at the S&P 500, yesterday was a pretty decent downside day as well. Honestly, nothing crazy, down just shy of a percentage point. Where was it? There's a lot of nonsense lines here, excuse me. But we had a downside move. The highs of last year's Jackson Hole were 44.85, and the lows were 43.78. So 100-point move to the downside on the S&P during that period from last year. When we look at the NASDAQ at that same time, I don't know where, I think it must be this one. So down like 2.19%. The highs were 15,481 and the lows were 14,817. So a very, very significant move there. 600-point drop on the NASDAQ after the Jackson Hole. So investors and traders, market participants alike, are looking at what's going on in Wyoming, right? And it's not necessarily, as you might think, Jackson Hole is a very nice place. It's got a national park and whatnot, but we have the Jackson Hole Symposium that comes out today. It's going to be hosted by the Kansas City Fed with Jerome Powell set to take stage at 10 a.m. Eastern. So the first hour of the day might be a little dull, right? Lower movement, as everyone pretty much has eyes on Jerome Powell and whatever stream he might come out of. So the theme for the 2024 conference is titled Reassessing the Effectiveness and Transmission of Monetary Policy, and could provide further clues of the magnitude of policy easing with the next cycle that's slated to start in September with the first rate cut. And back at the Jackson Hole in 2020, Jerome Powell unveiled a policy flexible average inflation targeting, which basically stated that the central bank would accept higher inflation to allow for quick labor market recovery from the pandemic as price pressures spiraled out of control in 2021. The Fed chair doubled down on his infamous transitory call before making a serious U-turn that led to an aggressive tightening cycle. A technical recession ensued in the first half of 2022, but the U.S. economy has still been resilient since, right? Then despite bearish fears and countless calls for a recession, we saw that the equation has changed in the recent months as inflation moved closer to the 2% target, so to speak. Instead of putting a focus on the price stability portion of the central bank's dual mandate, attention has turned to the maximum employment part, given an uptick in the unemployment rate. And to add to that this week, right, major downturn revisions in the non-farm payroll data, which was the biggest since the global financial crisis, and will give Jerome Powell plenty to talk about when discussing expectations for the broader economy today. I believe the theme of this year suggests, of this year's event suggests that the possibility of more comprehensive discussion on how supply-side factors influence monetary policy, an analyst said in a Jackson Hole 2024 preview. While the restrictive effects of short-term rates are evident in certain areas like credit conditions, the broader economy's continued growth, despite the restrictive measures, presents a puzzling challenge to traditional views on monetary policy transmission. So we'll see generally what goes on during the symposium. Will he take a dovish or hawkish stance? I don't know if you guys have seen, but the meme surrounding, right, the tie that Jerome Powell wears, right, purple for hawkishness, blue for dovishness, or it might be the other way around. It's blue and purple, I know that for sure, but we'll see what kind of tie he wears to give us more of an understanding of whether he's going to be dovish or hawkish today. But that's mainly the news that surrounds the trading session to start. We have, let's take a look at these equity markets here. What we got going on the S&P 500. Short a little update because these days on the Jackson Hole Symposium are notorious to be a little more volatile and like swingy. Last year we saw a massive drop. It doesn't mean like, okay, we're pricing in a huge downside move, but like be prepared for something like that. Since we did start some of the downside momentum yesterday, we're trying to accept into auctions lower from yesterday, and we had a decent rally on the overnight session, but we still got to keep in mind it could just be a lower high. The daily volume is still abysmal. We've seen over the last few days very, very shitty daily volume pre-market that eventually comes out later on in the session. So still under 100,000 contracts that have been traded. Right now, the S&P 500, we dropped through some major areas yesterday. Once we started moving under that 56.45, once we started moving under that 56.45, that downside really opened up. You can see where the weekly value is under that 56.10.12 area. That's what I was looking for this whole week, to start moving more aggressively to the bear side. And we got like about a 30-point drop from that area. So even though like maybe you might have missed tops, when you start reading where these auctions are and where these balances are, if we start escaping and moving into lower prices based on these balances, you're going to get more of a directional understanding of what's going on. So we came into a key area, into the 55.85 on the overnight, where I was saying, hey, you know what, there's a lot of people that are getting imbalanced into lows. This could present a bottom for the overnight to swing on the upside move, especially above 56.10. Above 56.10, that's where I was trying to pinpoint these longs to get that momentum to the upside. So right now, we're at a very pivotal spot, right, at the bottom band of a distribution between 56.26 and like 30. We can present a failure there to see if prices want to actually re-offer and continue this downside momentum. But for me, again, I have to watch that 56.10, 56 like 15 area. If we can actually hold an offer below that, that's where the sell side comes in for me. That's where the offering starts to get a little more aggressive, where I would most likely try to look for that continuation, potentially moving down to 56.56, right? Because we can just present a higher low and continue the upside momentum, especially if we accept the distribution to the upside. So Jackson Hole volatility, I don't really want to be an active trader today. I'm going to be very selective and see what happens in the first like hour or so, especially waiting for Jerome Powell, and then we'll act after on smaller size. So keep that in mind. It's Friday, going into a big event. You don't want to ruin a week on a Friday. Manage that risk, trade probably smaller, and be very, very selective of the trades that you take. So that's what wraps it up this morning. Thank you, everyone.